Hello, Warriors. Before I get into the analysis, this is Coach at TradeGATEHub.com. If you're in our main chat here, and I encourage you to come here, is take 5 handles. Had a sell recommendation here at 401.70. So you have about 6 handles here. Take partial profits. I'm a big believer in it. And I'll trail your stop. We were risking 13 handles. Now we'll put it above 47.04, which gives us a risk of 3 handles. We book 6. Worst case scenario is you make 3. And we're going to let this go. I hope everyone enjoyed the interview I did yesterday with David Hunter. And, you know, he's an uber bull looking for 5,300 first quarter in the S&Ps. He's been taking a lot of heat because he has a lot of company now. Everyone now has embraced the melt up scenario. And what I'm seeing here in the S&Ps is a possible A, B, C, and we may have some selling into December. Remember the expression that the Bears feast on Thanksgiving, that's next week. So maybe we get a 4 or 5 day sell-off here. And worst case, I would say would be, you know, around 4,600 to be 4,550, 4,500. Prior highs are my targets. Prior high in the S&Ps are up here at, you know, 4,550, 4,600. NAS is acting a little better. It almost made some new highs here. So take a quick look at NASDAQ. It almost attacked the highs here. It's acting better, maybe because the yen came off a little bit. So anyway, that's it. You still have over 6.5 handles. I just have to post it here in the main chat, and you get to the main chat by going to www.tradegatehub.com. So I'm just going to let people know. Take half. So this is what happens during my stream, after my stream. And during the course of the day, I'll be posting here. But I do think there's more left. I'm also a believer in when I have something going my way to get paid. What if the market comes back and rallies and I didn't take anything off the table? I've been talking to you guys since we've been on the air that that's an important thing to do. So now I want to get into a theme. People that have been following me here on TradeGATEHub the last several months know that I've been looking for 96 in the Dixie. That this would be the battleground between 96 and 97.5, 98. I know some people are looking for 100, but I think that now's the time to start considering. I think we've shaken out a lot of dollar bulls. I know people are starting to talk the milkshake theory, which could give you 120, 140 in the dollar index. And that's going to be a crisis brought on by, you know, the Fed following suit. Another central bank raised rates today. In fact, that's our question of the day. If you want to win $20, you know, and you're here in the room, it's really for us. So anyway, there was a central bank that acted today, and that's going to be our question of the day. So I just want to talk about the euro. You guys know I had some long-term trend lines drawn. Here's your weekly. I had this line drawn for, I don't know, going back to probably the beginning of the year, thinking that eventually we would attack it and that this could be long-term entries in euro. I know a lot of people might think that we're going to, you know, I'm sure that we'll start hearing from the parity euro people, but I'm thinking that we're starting to put in an area here where the euro could just be considered a correction off this straight line move that we had from this 106 level. Actually, it was down here at 105.50. So this was a 1700 pip move right here from the lows to here, 18. So 18 from here around 112 could give you 130 euro. So I'm starting to think a little bit longer term about a weaker dollar. And perhaps you should do it too. Short term, we had kind of a flash crash yesterday where we took out the line but held another speed line of mine. I'm not saying that we can't go through retests and that this was it, because my work in RSI. In fact, let's see if you guys are learning anything about how I use RSI. What kind of high is this? Let's look on the 4-hour. It's a little more dramatic. See this price high, which was a long talked about target of 96 in the dollar index. What kind of high is this when you work with the real simple implicator, which is my name for the relative strength index? Anyone know in the room what kind of high it is? Anyone on YouTube have an answer? When price and momentum are both making highs together, higher highs together? Anyone know? You're correct. You're correct. There we go. Confirmed high. And what's the implication, Brooke, of a confirmed high? We're coming off after making a confirmed high. What does that imply? And it seems simple to know, but it's actionable. It doesn't give you entries, but it gives you a bias, right? So, Brooke, do you know what the implications of a confirmed high are? And as traders, what we should be looking for? Okay, well, now you're going to learn this too. When you have a confirmed high, as a trader, you should be looking for a place to buy a break, knowing that that market's rarely put in a long-lasting high. It's just a high, but maybe not the high. It could be, but what I'm seeing here is that we will have another high. Whether it comes from lower levels or not, that I don't know yet. Kind of looks like it may, but I don't believe this is the end of the dollar rally. It's the beginning of the end. Okay, so it's a process that's going to take, pullbacks and higher highs where momentum begins to wane and divergences begin to occur. And we don't have any divergences there. We really don't have any in the daily 2-hour. Even if you want to call this a divergence, it really isn't. It's higher. These readings are higher on the 2-hour than they were here. So I need to see RSI under 70 while the Dixie's making a new high to start probing the short side. So I don't use RSI to say, oh, the market's overbought or oversold. I use RSI to tell me whether or not there's potential for a continuation move, or whether or not that move is running out of mo and I could start looking to trade the market counter trend and look for an inflection point. If you understand what I've said, give me a Y. And you may want to write it down. And you may want to watch this video more than once, because it also is, besides providing analysis and ideas, a teaching instrument for everyone's eyes and ears that watch it. So, that's one aspect of the RSI. Last time I did, because we've had a few interviews, Michael Tuesday and David yesterday, just to show you, there was a pretty successful trade from Tuesday. Monday, I said, you could short it in here with an 80 stop. Okay, 85 stop, never took it out. And Tuesday was a sell in the chat room from 73. And that day you had a pretty good break. You had this move from 73 to 50. And it's really retraced a lot. So, this was a turnaround Tuesday scalp, and gold's acting pretty good. I'm not short. I'm not long. In fact, it almost looks like we're going to make another move to the highs up here. And maybe we get up towards that 1890 level. But if you see this happening, we could have like a 3 drive here. Again, this could be 1. What's the RSI doing? Confirming. So we pulled back, we moved sideways, and then we made a new high up here, and pretty glaring divergence. This was your first non-confirmation, and I traded it. And now if we rally to new highs this time for a 1, 2, 3, I could probably draw a little wedge line in here for the gold. You know, don't really bet the farm on a wedge line because you could have throwovers, but let's just draw this, see where it's coming in. Okay, so that's going to take you up towards the 1880, low 1880 range. That's a target some people have, so I may attempt it there. I think part of the strength in the gold right now is that the yen really kind of gave up the ghost yesterday, which puts a halt to yields rising. Still doesn't look too good to me, so that means, you know, maybe if the yen's going to head lower, yields could still not head up for a while, maybe pause and consolidate. They still look, I'm still looking for 2% by year end, but we've had one heck of a move in a week or so from 141 to 65. That's 25 bips. Still looking for higher yields, still looking for a higher yen, but we may be in for a pause on that. And that could be what's going to be behind one more push up in gold. And actually, when you look at the gold chart here and you look at the silver chart here, silver's looking a little weaker. Okay, so, you know, we're getting a little bit of a pop in the gold silver ratio. I don't see it up here anymore. I must have erased it. Anyway, so silver looking a little weaker. I would still be patient, especially this is something that I want to talk about in silver. Okay, so I had this as a neckline, and I'm probably not the only one. So if this was a breakout day, what are we doing here? Why is the market still waiting? And I'm not saying that, you know, I could be wrong and we could explode the next couple of days. I'm just giving you my thoughts that if it was a breakout over this blue neckline, why are we just hanging around it? And 1, 2, 3, 4, 5, giving you 5 days to react to it. And even, you know, buy it right at the breakout, buy it underneath the breakout. We'll see. I would say that back under today's lows, silver could be pretty vulnerable. And, you know, what could happen is if we do get any kind of pullback in equities, that could also be a factor to take it back down into this level. But it'll be real bearish if gold makes a $20 move and silver doesn't break out. So we'll see what happens there. Canada, I saw something kind of interesting developing here on an intraday chart. Looks like we're in a second drive here on the 4-hour, and we are diverging. 2-hour, still diverging. So, you know, this is saying maybe we're getting close to the end of the break in the crude oil market. If you've been following me, you know, I've been bearish for weeks. Got stopped out once out of many entries, and still long some of this. This is ETF. Got a turn here. Thought we could go to 1450. We'll see if this is the bottom in crude or not. I know some people thought we'd go to 76 before the turn. And let's see, what else do I want to cover here today? Aussie's your weak sister in the currency market, but we're diverging. I wouldn't short it yet. So what we need in the dollar is some dollar softness for a while, and you know, kind of work lower and then have another shot up. And I think that before the end of next month, we'll have some type of dollar high no later than next month, early January, and it may be the best shorting opportunity in the dollar probably since COVID. So all we're doing is retracing the peak from the flight to safety here during the crash, the COVID crash, and the dollar suffered. Everyone was bearish coming into 21, and I suspect we'll have everyone bullish a dollar going into 2022 because of, you know, we've had price action going that way, so you'll see a shift in sentiment. I think that we could end up with something like this from here, and I also think this would support David's thesis of a blow-off melt up in the S&Ps towards above 5,000 in the first quarter next year. It's not going to do it with the dollar exploding, because that could set off some type of crisis in emerging market economies that denominated their debt in dollars. So a higher dollar is making it more difficult for them to service that debt. Higher rates is just another stressor on their balance sheets for these countries that did a lot of borrowing during COVID when their economies were shut down and did it in dollars. So tougher to repay loans in dollars when the dollar is appreciating. So I also want everyone, and I'm starting to pay attention to this, since China's a big part of the global economy, I wanted to bring this to your attention that we could be setting up a 3 drive to a bottom formation in the yuan. Devaluing the yuan has been a way in the past that China has dealt with economic stress. Everyone knows, even though their stock market is recovering, that they have debt issues. So I'm looking at this potentially being a long-term buy as well. So we have some long-term buying opportunity in setting up in the yuan and the euro too. So we'll see what kind of close we get. We only have 1 day left, so you know we could still go 111, retest these lows. As you could see, you know, there's no divergence on the daily, so I'm not in a hurry. We need a bounce and then a retest. It really is no divergence down here. You know, sometimes when you have a flash crash, it almost reminds me of, you know, what we had in gold at the bottom. Remember this? Flash crash in Asia. That doesn't show it. Flash crash in Asia. This, okay, which ended up being the low. So that maybe it's comparable to what we had during this spike, especially in 1 day, 1 night, when we took out the 113 level, really got going. So, you know, perhaps we're reaching a point of exhaustion in the euro down here. So through playing the short side of the euro for now, and really the most important thing to be successful as a trader is patience. And there really is nothing to substitute it with. I'd say that your biggest enemy is impatience, which causes impulse trading and FOMO, and you're going through different charts and you're going, oh, I have to make some pips today or I won't meet my weekly quota. Stop trading money and start trading markets. Did you hear that? Stop trading money and start trading markets, and do and take what the market gives you, not what your budget is and not what your monetary goals are every week. That's my advice. And I think that would reduce a lot of the things that you're forcing. Really, there is, you know, nothing to force. You don't have to. There'll be enough that'll come your way that'll be compelling enough for you to pull the trigger. So I'd love to see the gold, you know, if we don't rally for a 3rd drive up here, this is what I told people to do on Monday. I said, if you're long, you take partial profits and you look for a pullback to the breakout. I said, if you're flat and bullish, you just sit and wait. So now you're just sitting and waiting here, right? And if you were aggressive, like me, you took the short. So I have nothing on right now there. So we'll see what happens getting some follow through in the S&Ps. So I think it's the one, and threatening some moving averages here. So you have 9 handles here if you took the trade in our main chat. Michael posts some great things. Why don't you come in and post some things? Why don't you come in and ask me some questions while I'm on the air or when I'm off the air? And if we're adding value to what you're doing here, you could, doesn't cost you anything to give it a like. You could retweet it if you like it, let people know. This is free. And I know that people think, well, you know, if you're giving something away, how good could it be? All right. You know, people feel like they're getting something when they pay a lot for it. And that's not always the case either. So take advantage of it while it's free in the embryonic pioneer stage, and learn some things from me and the rest of our community. And with that being said, S&Ps continue to fade. Next target's going to be around this 4640 level. But to me, it looks like, you know, we could be setting up for this Bears feast on Thanksgiving sell-off going in over the next several weeks before the next leg up happens in S&Ps. So remember, don't just count your gold coins or your oil wells, right? Don't count those things. Not only those things, just, you know, be grateful. And you should be grateful because you have risk capital, which means you're doing okay if you have some equity to risk in the market, and instead of having to make a decision between paying your mortgage and paying the doctors. So good hunting the rest of the day. It's our mission to build up and edify traders every day. And if there's one thing to take out of this live stream today, write it down. I am going to start trading markets and not trading money. So you trade what the market says. You can't bend the market's will to what your weekly targets of pips are. So good hunting, everyone. Thanks for your attention. Oh, Brooks, grateful for finding TradeGATEHub. Spread the word. And everyone have a great weekend. I'll be back with you on Monday. And really appreciate you paying attention, and hope I'm helping you out and adding value. So adios, everyone. Good luck the rest of the day. I'm not against luck. Adios.